Have you ever wondered why each time you are about to enter a trade, the market moves 10, 20, and even 40, 50 pips against you, hitting your stop loss? Have you ever wondered why is it that the banks always seem to win? If these are things that you're actually considering, you're watching the right video. Today, I'll be breaking down supply and demand so that you fully understand how the banks manipulate the markets and how you can begin to profit from it. So let's get right into it. Remember, if you're new to this trading space and you're new to this beautiful face, I'm Kaale, and this is where I take you to profitability era, where you begin to clock profits consistently on the financial markets. So if that's something that you're interested in, don't forget to hit that like button. Don't forget to subscribe. It is absolutely free, ain't costing you nothing. If you're getting any value from these videos that I have been delivering, just subscribe and let's get right on the charts. Hey YouTube family, welcome back. We on the charts, and literally I'm going to be breaking down supply and demand for you so that you fully understand. Now I'm going to start off with supply. Supply is literally where you have aggressive selling pressure. And when I say aggressive, it means that we've got some big, juicy red candles. Okay. Now, literally, what you have to understand is these areas, look at this. I want you to understand when I say aggressive, I mean big candles, okay? So this is literally a supply zone, right? Aggressive selling happens at supply zones, okay? Now, when price hits a supply zone, you generally have the big players jumping in and dropping price aggressively. That's literally what it is. Now, I want you to kind of understand this simple. Look at where we are right here, right? You can see the massive move down, but how do we actually highlight the supply zone, right? You literally take your rectangle tool and you're gonna highlight from the wick, right, of the previous candle before the massive move, right? Now, we know this is a supply zone, so we want this bit to be red. Perfect. All right, there we go. Now, the entire candle, that little green candle from wick to wick, just before the aggressive selling pressure, we want to highlight it because what we are possibly going to have is that price is going to come back and tap this area and then actually push down again. Okay, so we want to see where the big boys are playing. Why? I want you to get this very clear. Think of a big ocean. We're in a massive ocean, and in that ocean, you and I are little tiny fish. Okay? We're little tiny fish in the ocean. Now, of course, in the ocean, we're gonna have some whales, some dolphins, some sharks. We're gonna have some big, massive sea creatures. And guess what? They will come at us and gobble us alive if we allow them to do that. All right? So I want you to really picture these players in the game of trading. The big banks have enough money to move the markets drastically. But you and I, as retail traders, we do not have that much power. We do not have millions and trillions and all of that money to be moving the market in a phenomenal way. So what you need to understand is that whenever you see these massive moves, this becomes a point of interest because you and I alone cannot move the market like this, right? So this area becomes a key area for my supply. Possibly when price comes back here, it can either bounce or it can break, right? Any of the two, but oftentimes it will respect it first before it breaks, right? So this area is literally what I would highlight as my supply zone. Supply zone, perfect, so that you can all see. Now, the other bit is literally what we call demand. So if supply is where we've got aggressive selling pressure, it simply means that demand is going to be the absolute opposite, right? So demand is going to be where you've got major buying pressure, right? Major buying pressure. So with that said, as you can clearly see here, we've got three massive green bullish candles. Now, one of my rules when highlighting demand zones and supply zones is the power of 3 or more. Whenever I see 3 massive candles in a row or more, that's telling me that the big boys are at play. All right. And if the big boys are at play, I want to go playing with the big boys. I want to roll with the big boys. Of course, I want to roll with the people with the money. I don't want to roll with the brokies. I want to roll with the big boys. Okay. So right here, literally, you can see the power of 3 massive green candles. So what you want to do to highlight your demand zone is to zone in on this candle here, which is your red candle, last candle before the up move, right? You want to zone in on it. So we take our rectangle tool, we highlight from wick to wick, and we drag that across. Because what we're waiting for is the price to come back into this area. And we'll make this a green because it is a demand zone. This is where price is pushing up from, and we're buying from this area, right? So I'll drop the text in demand zone so that you can clearly see, all right? This is our demand zone. So don't confuse them. Demand is where we've got aggressive buying pressure. Supply is where we've got aggressive selling pressure, okay? So this is literally demand here because we've got massive buying pressure here. And obviously you would have a bit of supply coming on here where you've got these huge, right, candles, red ones, all right? So we've got a bit of supply at this area here. Okay, so let's just do it all right here. Get our rectangle tool and we'll highlight this bit right here and make sure it is red, so that we can see that this is where we've got a bit of supply. Okay, so these are areas that we're zoning in on. Why? You can clearly see the big boys are at play. And if you're trading, I want you to clearly understand this. If you're trading, you're looking for where the big boys are playing because you want to roll with the money. You ain't rolling with no brokies. You're rolling with where the money flows, you go. Okay, that's it. So highlight these areas. Always notice when you've got massive selling pressure and when you've got massive buying pressure with humongous candles backing it up with that power of 3 rule that I use. Okay, so this is literally supply and demand. This is the basics. I hope you kind of understand the definition that I have given to you when it comes on to supply and demand, right? Supply, aggressive selling pressure, demand, aggressive buying pressure. Okay, good. Now, how do banks trick retail traders when it comes on to supply and demand. Here's the dirty secret, okay? The dirty secret. Grab your pen and your notepad and make notes here. What the banks and institutions do, they don't buy at market price, okay? They create false moves to trick traders, okay? Always remember, this is manipulation bit. So what they do is to create a little bit of false move. If they're going to be selling the market, they will buy the market first, and then aggressive selling just comes out of nowhere, right? As you can clearly see, we were pushing up as if we're buying right here, right? Pushing up, kind of playing a little bit here, but still kind of going. And then all of a sudden, there was so much power to pump the market down, right? So this is literally what they do when it comes on to the trading space. And you've got to really just understand that this is just the way that the banks work, right? When you have a little bit of fake outs, fake breakouts, and then the market reverse, that is literally the bank at play, right? That's because they remove liquidity first, then they move price. So that is why they're pushing it up here, price is moving up, and then all of a sudden, boom, it crashes, right? So if you see a sharp drop like this, if you see a sharp drop, right? Literally, we had a little bit of demand here. Look at the candles pushing up. And then there was this sharp drop, right? Followed by a quick reversal. Look at this. We had a drop, quick reversal, right? This is telling you that the banks are really at play, right? And when they play hard, okay? They play hard. So whenever you see these drops into a demand zone, right? Followed by a quick reversal, that's the bank at play, okay? That's literally the trick that I want you to understand. Now that we know how they actually work, right? How do we actually trade like a pro using supply and demand? How do we do that? Now I'm going to give you some steps. Let me get my little text here because I like to write so that you understand. So trading. So I'll go with one. First step is to identify your supply and demand areas, right? That's your first step. Identify, and I'm going to put S and D zones, okay? S and D zones. All right, hold on. S and D zones. So I identify your supply and demand zones. That's one. All right, that's the first thing that we're looking for. Now, once you have identified these zones, one of the necessary things that you're going to be doing is waiting. You're going to be waiting for what we call a liquidity grab, right? Which is a little bit of fake out. So two, wait for a liquidity grab. Liquidity grab. Yeah. So that's number two. That's what you're literally waiting. You're waiting for a fake out of the demand zone or the supply zone before you get into that trade because it often comes. Okay. Now, after this happens, your task is literally to enter after you've got confirmation, which is a strong engulfing candle, wick rejection, anything like that. So step three, right? Enter with confirmation, right? So your confluences like, and I'll put some examples, e.g. Example, engulfing candles, right? Engulfing candles. So your engulfing candles or wick rejections, right? Wick rejection. Okay. And let me pull this over so that you can literally see. Good, good, good. I hope you're making notes. Guys, if you're actually getting any form of value from this video, remember to hit subscribe and remember to like and drop a comment as well. Drop a comment below. So this is literally what you're waiting on. 3-step formula. Identify your supply and demand zones, wait for a liquidity grab, and then you enter with confirmation after the liquidity grab. All right. And what are your confirmations? You're looking for engulfing candles, wick rejections, right? You're looking, even if you're using indicators, looking for your crossovers with your moving averages. Any amount of confluences that you use, I generally go with 3. All right. Once I've got those 3 tied in, I'm in that trade. So I literally want you to just understand that this is your go-to. Once you identify these supply and demand zones, wait for a liquidity grab, right? Enter with confirmation, and obviously you'd be seeing something playing out. Now, let me see if I can find a move to literally show you. Let's see if we can get something going. Okay. So this is clearly a demand area. You can see the massive candles. So right now, what I'd be looking for is for price to come back within this region before we can buy, right? But right now, let's look on UJ. Perfect. So we're currently making some moves at this area. Let's see how it, okay, perfect. We've got some lovely move here with these engulfing candles. So what I'm waiting for, all right, look, let me put this in. Look at this. So we'll highlight this area, which is our supply zone, right? Supply zone, all of this. And let's see if we can get price to come back into this area. There we go. So what do you notice? Literally, we have done the liquidity grab, which is right here, wick rejection. So I'll zone in so that you can see. Look, liquidity grab means that we've swept this high. Liquidity grab, right? So we've highlighted the zone of supply, all right? We had the power of 3. We actually had 4 candles in a row, power move. Highlighted this area, waited for price to come back. And what did it do? It literally did the liquidity grab, which is step 2. So now we're waiting, right? Based on one final confirmation that I'd be taking the trade from here on to get price going lower. All right, so let's see. All right, phenomenal stuff. So look, wick rejection, we've got some nice momentum candles coming into play. So this would be our go-to because we're also having a moving average crossover here, right? Wick rejection, we've already had the liquidity grab. We see the engulfing candles coming in. So literally what you can do here is to decide that, okay, let's see if we can get a pump back right here to get in on the trade, right? Let's see. See. Okay. There we go. This is my go-to to actually enter, but let's wait on the actual confirmation of a candle. Phenomenal. So we've got an engulfing candle right here, right? So literally I'd be entering right on this move because we're in the supply zone. We've already had the liquidity grab. This is my go-to to enter the market. So I'd be putting my short position, be entering right here. And of course, my stop is going to be above this area here. And I'll be targeting, based on what I've seen, I'm targeting this area here to see if we can get a flow into here. Why? This is a major demand area, right? So as you can see, price aggressively pushed up from here. So this is my area that I'm targeting to get profits, right? And I'm putting my stop right above here so that I give my trade enough time to breathe. So let's see how it plays out based on this liquidity grab. Perfect. Look at that. Look at that. Sweet. Sweet move. Right? Perfect stuff. And of course, you're in this trade, you're literally going to be trailing your stop, right? So this, reducing your risk on your trade, bringing your actual trade into profits, because you're in massive profits. So don't leave your stop loss open when price is actually moving in your favor, right? While you wait, right? Even if you just want to take your trade, your profits right here and be done with it, nothing is wrong with that. But look at that. Would have literally been smashed out. Perfect, perfect move. And what did we do? Look at that. I want you to fully understand what you did. We came right back into the same zone that I just showed you, right? Look at this. So this would be your demand area, right? Because we had price massively pushing from this area, right? This would be your demand area here. And let me just change the colors here. Remember, we put demand in green so that we can clearly see. There we go. Now, what did you see? We had a liquidity grab, right? So when you highlight these, wait for the liquidity grab, right? Wait for it and then wait for price to show you what it's made of before you just jump into the actual trade, right? Okay. So this is literally the steps, right? And if price is not giving you an indication that it's ready to go up, be patient, right? Be patient. Look at this, right? Look at this. We're back into it, made a double bottom at the demand zone. Double bottom confirmation. When it pulls back here, you could literally be entering the actual trade, right? There we go. Look at that. Pull back into the double bottom. And this could be your go-to to decide that, listen, let me see if I can catch a long position here, right? Put your stop here and at least take a 1 to 3 or a 1 to 2 back into this area, right? All right, that could be your go-to. Okay, just to see how price works in your favor. Supply and demand, very effective for trading, right? But just wait for the confirmation before you hop into that trade, right? Perfect. Do you see that? All right, you'd be in profits, and this is how the market moves. It moves up and down. So when you're being moved like that, don't panic. If you're a new trader, you're gonna be in profits. You're gonna be, moving up and down until you get that final break into smooth sailing profits. And, you're in loads of profits that you can actually just, get out of that trade. All right. So literally, that's the formula. That is the formula to get you into the successful era of trading with supply and demand, right? That is actually what you should be waiting on, looking for your supply and demand zones, waiting for that liquidity grab, and then waiting for full confirmation for price to get to where it's intended to be. As you can see, trade playing out beautifully based on supply and demand, right? And always remember, when your trading is moving in your favor, you don't have to sit and wait for the massive TPs that you have. You can literally just reduce the risk on your trade, be in it risk-free, secure your profits, and don't allow it to come back to your entry and then knock you out when you've been in massive profits. All right, so we got a nice move on this. I think it would have been a 1 to 2, Lovely stuff. You got that push from the demand area. It may not have directly come all the way back into the supply here as yet, but it's going to do that. It is going to come there. So we don't impose or bias too much on the market. We allow the market to show us what it's made of, and we set our trap to get some profits and to play with the big boys, because that's where the money is at. That's literally where the money is at. All right. So I hope you really understand supply and demand, and I hope you're going to apply this into your trading so that you can be making consistent profits in the financial markets. All right. With that said, if you're loving the content that I'm delivering here, remember, hit subscribe, like this video, share it with a friend who is struggling with trading, and always remember to put God first in everything you do. And as you can actually see, we still came back into the supply zone. Look, we came and we rejected. This thing works all the time like magic. Okay, so look for those areas that I've shown you and apply it within your trading. All right, apply it within your trading as much as you can, and make your profits consistently in the financial markets. With that said, put God first in everything you do. Remember, if He is in it, without a doubt, you've got to win it. Yeah, that's literally it. The tutorial is finished. You can go now. I hope you took notes and I hope you got some value from this. I'll see you in the next video. Bye.